Hello everyone, welcome to the Ichimoku charts.com hourly analysis for the Aussie dollar US dollar FX for Monday, February 25th, 2013. Well, a market that's in an uptrend at the moment. This final candle has made a higher high and a higher low. The last candle we see on the chart is still currently developing, but the final candle continues the trend to the upside, a trend that started some time ago and began with a spinning top type candle after a solid bearish sell-off, and the market finding support down around the first pivot point level of support for yesterday's trading. The spinning top type candle then gave way to a solid first time frame uptrend with quite a few white body candles, and then as the candle developed and tested to within the cloud, we saw some small bodied candles developing, and that does suggest that even though the buyers have some upside momentum, the amount of momentum that they had is certainly not as much as previous, and it does suggest a possibility for a change of trend. We've also seen that current hour of trading that's completed close down around the midpoint level, and that suggests that neither the buyers nor the sellers have control of the market, and that's in unison with the previous hour's trading, and in contrast to the two previous candles where the buyers closed with control. So even though we've seen the buyers lose control of the market, the sellers haven't really established control, and that does raise doubt about change of trend to the downside. But the lack of commitment from the buyers now suggests that there is a possibility of a change of trend, and the lack of commitment is highlighted by the shadow on the top of this candle. That lack of commitment is seen at the market testing around the Kijun-sen. And for the previous hours trading, we saw rejection from there, and today we've traded above there and we've been rejected from there as well. So the area around the Kijun-sen in the short-term time frame, and that's at 120.87, is very, very important resistance for this market. If this market does continue to rally, and if we do see a bullish close up above the Kijun-sen, we could see the market test up to around the top of the cloud, and that's trading roughly around the 103 level of important resistance. So very strong resistance around there, and just above there we have the first pivot point resistance level around the 103.06 level, so very solid resistance overhead. In terms of support to the downside, we have very solid support at the bottom of the cloud, and that coincides with the area that the Kijun-sen, the Tenkan-sen, the green line here, is trading, and also the area where the middle pivot point is at. So very solid support down below. Now, if we do see a breakout down below the cloud here, we will potentially see a market that's bearish in the long-term time frame and potentially in all three time frames. It could be a very good sell signal in this market. No solid support until the market tests down roughly to around the 102.61 area, then down to around the 102.48 area, and the first pivot point level of support around the 102.30 level. So strong potential for the market to trade down to lower levels. The market at the moment where we've closed is neutral in the long-term time frame by trading within the cloud, just bearish in the short-term time frame by trading below the Kijun-sen, but technically pretty much neutral by trading very close to the Kijun-sen, and technically bearish in the bullish in the short-term time frame by trading above the Tenkan-sen, the green line, but then again technically neutral in the fast-term time frame by trading very close to that indicator. So really no strong signals based on Ichimoku at the moment. We are waiting for a breakout from either above the cloud or below the cloud, and it seems as though the way that we have seen the sellers lose commitment, or the buyers lose commitment in the previous two candles, that there is a potential for the market to trade to lower levels. But remember, very, very solid support down below where the market's trading at the moment.